Hey guys, get ready for an unprecedented revelation in today's video that will undoubtedly astonish you. Prepare yourself to be captivated by an extraordinary unveiling that will reshape your entire perception of trading. Brace yourself, because this remarkable innovation will revolutionize the way you approach the market. Introducing the Relative Trend Index, a groundbreaking indicator that surpasses the original RSI by an impressive margin. Your trading journey is about to reach unprecedented heights with this state-of-the-art tool. Don't miss a single moment of this video as it holds the power to transform your trading experience forever. To add this remarkable indicator to our chart, let's navigate to the Indicators section and search for Relative Trend Index. Developed by the Zeerman, this indicator provides a compelling alternative to the traditional RSI. To provide a comprehensive analysis, we'll also include the original RSI, a built-in indicator on the Tradingview platform. Now, let's take a closer look at the new RSI, the Relative Trend Index, alongside the familiar original RSI. As you may already know, the RSI is a powerful tool for identifying price movements and detecting overbought and oversold conditions. However, it does have a limitation. It tends to generate false signals during strong trends. Let's examine this chart to see an illustration of this drawback. During the downtrend, we can observe numerous instances where the RSI indicated oversold conditions prematurely. These occurrences happened before the actual price reversal occurred, causing potential confusion for traders relying solely on the traditional RSI. This is where the Relative Trend Index steps in to offer a game-changing solution. With its advanced algorithm and enhanced calculations, the RTI significantly reduces false signals during strong trends. By incorporating additional factors into its calculations, the RTI provides a more accurate representation of market dynamics. While some signals from the traditional RSI may have been correct, many false signals can lead to costly mistakes. These false readings often indicate temporary weakness or pullbacks within a trend rather than a complete change in direction. It's crucial for traders to avoid taking these signals at face value without further market analysis. Enter the Relative Trend Index, RTI, a remarkable indicator with a remarkable ability to adapt to market volatility. Unlike the RSI, the RTI takes into account the market's volatility and minimizes short-term fluctuations. It combines the best of trend following and mean reversion characteristics, making it highly responsive to price action. In our chart, the green line represents the RTI, while the blue line depicts the RTI's moving average with a length of 20. Throughout this video, our primary focus will be on the RTI line similar to the RSI line. When the RTI line is above 50, it indicates an uptrend, and when it falls below 50, it signifies a downtrend. Here's where the RTI truly shines. During periods of minor pullbacks, the RSI may stay consistently above or below 50, aligning with a prevailing trend. However, when faced with deeper pullbacks, the RSI starts crossing below 50, generating numerous false signals along the way. These false signals can be frustrating and lead to confusion. Now, observe the RTI during the same period. Even as the RSI generates false signals, you'll notice that the RTI line remains steadfastly above 50 during the uptrend. It filters out the noise and provides a more accurate representation of the market's direction. It's a powerful tool that considerably outperforms the RSI in identifying trends and pinpointing overbought and oversold areas. Don't let false signals derail your trading strategy. With the RTA, you can gain a deeper understanding of market dynamics and make more informed decisions. Watch closely as we explore the remarkable capabilities of the RTI and witness its consistent performance in real-world scenarios. Stay tuned for the key insights that could transform the way you trade forever. Are you ready to take your trading game to the next level? I've got a simple yet highly effective strategy that will help you generate profits in the market. And the best part? It's incredibly easy to implement. Let's start by adding the Super Trend Indicator to your trading platform. Head over to the Indicator tab and search for Super Trend. This indicator has been widely used, but we're about to show you how to combine it with another powerful tool for even better results. Now, here's the game changer. We will combine the Super Trend Indicator with the RSI indicator. By doing so, you'll unlock a whole new level of accuracy and profitability. Entry point: wait for the super trend indicator to generate a buy or sell signal. Simultaneously, check the RSI indicator. If the RSI is oversold below 30 and the super trend indicates a buy signal, it's time to enter a trade. Conversely, if the RSI is overbought above 70, and the super trend indicates a sell signal, it's a signal to sell. Now you must be feeling that you have learned trading. Is it that simple? But this is wrong. What I just told you about the method of trading is absolutely wrong. Let me tell you the right way. Before that, let me give you an information. You use this indicator, then your stop loss will be very small. So it may be that the broker you use, they provide you very high spread due to which your chances of hitting the stop loss will be high. So I would request you to use IC Market, which will provide you zero spread and you will able to execute pinpoint trades in market. Link in a description. Join now. First of all, you can use this strategy at any time and it will work in all markets. So now we will use this setup on Euro USD on 15 minutes time frame like scalping strategy. So let us now understand strategy in a simple way. We only need to consider two conditions for this approach. Condition 1, RSI indicator overbought. We should look for the RSI indicator to enter the overbought zone. In simpler terms, we want the RSI indicator to be in the green zone. Condition 2, super trend indicator, green line. Next, we need to observe the second indicator, the super trend. If the green line appears on the super trend indicator, that's our signal to execute a buy trade. Let's take a look at an example. In the chart, you can see that the super trend indicator has generated a buy signal with a green line. However, we will exercise patience and wait for the RSI indicator to enter the green zone. After observing the market for some time, we notice that the RSI has now entered the green zone. This indicates a favorable condition to execute our trade. To manage risk, we will set our stop loss at the green line of the super trend indicator. This allows us to protect our position in case the market turns against us. We will not set the target of profit. Continuously trailing the stop loss upwards as the trade progresses, we aim to secure profits and maximize potential gains during favorable market trends. It's important to note that this strategy might result in a slightly lower winning percentage, but the overall profitability can be substantial. The purpose of this technique is to capture significant market trends. Let's examine another example. In the current market scenario, you already have an active trade. Subsequently, a sell signal is generated. However, despite the sell signal, the market generates a new buy signal while the RSI indicator is still in the green zone. In this situation, you can consider executing another buy trade. To manage risk, you should set your stop loss at the green line indicated by the super trend indicator. In the chart, you can observe that the market eventually touches the green line, resulting in the stop loss being triggered. However, even though the stop loss is hit, the loss incurred is minimal. This is exactly the concept I mentioned earlier. By using this strategy, if you experience a loss, it will be small. Conversely, if the trade turns out to be profitable, the potential gain can be significant. The objective is to aim for larger profits while keeping losses relatively small. It's important to maintain discipline and stick to your risk management principles when applying this strategy. Let's analyze an example of a sell trade, which is the opposite of a buy trade. Here's how the scenario unfolds. In the chart, we can observe that the super trend indicator has generated a sell signal with a red line. However, we exercise patience and wait for the RSI indicator to enter the red zone. After observing the market for some time, we notice that the RSI has now entered the red zone. This indicates a favorable condition to execute our sell trade. To manage risk, we set our stop loss at the red line of the super trend indicator. As the market progresses, we continuously trail the stop loss downward using the super trend indicator. We can see that the market eventually does not touch the red line, triggering our stop loss. However, by using this strategy, we have made significant profits in this trade. To test your indicator, trade continuously on a 5-minute time frame for 5 days and observe the results. Keep a record of each trade, including entry and exit points, stop-loss levels, and other important details. Okay, the results are in. After 1 week, the test is truly amazing. So let's check it out. Now, I used a 5-minute time frame and it took 1 week of price data to find the 100 trade signals, which is really very good. There were 71 winners and 29 losses. The win rate is 71%. This is a really good win rate because our risk-reward ratio very small. The most won in a row was 5 and the most lost in a row is 3. The gain on the account was 76% and that's risking 2% per trade. That means if you had a $1,000 account, you can gain at least $780 profit using only one currency pair. The good thing about this strategy is that you only have to risk 2% on each trade. It is still very profitable if you put in 20 trades. At least 15 trades will be profitable with low risk-reward ratios. Don't risk more than 2% per trade. You can use more than one currency pair and you can gain more money with this strategy. Wow! We've reached the end of this incredible video journey together. Stay awesome, stay curious, and I'll see you in the next video. Bye for now. Thanks for watching our video.